Hello guys, welcome back to my channel. Today I want to look at USD JPY, and this is weekly time frame. I brought you to this MT4 platform to show you a bigger view of the chart, and as you can see, this is weekly time frame. Market has been trending to the upside. If I adjust my trend line like this, you can see that there is so many touches on the trend line, and market has just bounced on it the third time and its reaction. So based on this, until the trend line is broken, this was the first touch on the trend line. Where are my two cents? This is the second touch on the trend line, and as you can see, the current price has also touched on the trend line with a very big rejection. This is a rejection from the trend line. So let's see what price do next, but based on this, I think price is likely to go up, because if you look at it well, the whole of this move to the downside was a pullback to the trend line until the trend line is broken. Okay, let's see. This is weekly time frame. Let's go back to daily time frame to see if we can do something. Actually, I'm going to use the binary trading view to analyze the chart, because the tools are very easy to access. But to see the bigger picture, I brought you here. So let's go to the binary trading view to see. This is binary trading view, and as you can see, the same chart, but it's not the same. If you look closely, MT5 candles are different from here, and the formation of the candles are also different. Here can fake a lot, but that place, it cannot be. Okay, this market was moving to the upside this way before the whole of this downtrend after the M pattern that we are seeing. And as you know, the highest time frame you can ever get on this trading view, binary trading view site, is 24 hours. So that is daily time frame. So here you will not be able to see the kind of trend line we placed earlier. That was why I started from the MT4 platform. That is Hantech MT4 platform. So as you can see, this is the end of the chart here on daily time frame. But on the MT4 weekly time frame, there was still a lot of chart that we view. So that is the difference. As you try to analyze your chart on trading view, also try to use MT4 so that you can see the differences. So currently, look at this area. Market has just tapped into a demand area, okay, which is also as a support. That can also be used as a support. That was the exact point at which the market sprang to the upside, and it is back there again. With the kind of candlesticks we have here, is a very strong demand zone that can cause the price to go back to the upper side. So after price broke out this trend line, that was before you could catch the drop. This was a very perfect way to spot this drop. This was the first touch, the second touch, the third touch, then you broke it and retest before the whole move. But I didn't trade this. I just focusing on Euro USD for like I've been focusing on that pair for like almost two months now, and it has been doing well for me. So I said I should check on this one and see how I can predict it for the future move. So that's why, let's see if we can still go down more to see. We are basically looking at the entry. These things are not necessary, but they also help us to know the key levels at which market reacted and is likely to react again. So let's go down to see. We are here to find entry. So this was also one of the best areas to take your entry. After the first pullback, the second pullback came to the same lower low, the first lower low, higher low, before the market bounced to the upside. Okay, let's see if we can find some key areas. Okay, yeah. So this was the, after the empathy, this was the last, the major last low that created the last high. So market has broken it. That confirms there was a huge downward movement coming. That was before. After the breakout, it shows that market was coming back to a potential area before it continues its upward movement. And I think the retracement is over. Let's go to 4 hours and see something. If you can do a little bit to find entries, that's our main purpose here. We want to look for entries, possible entries. Okay, I can see I can have a trend line of all these downside movement. That's also giving me a trend line. Let me delete this one first. That's also giving me a trend line, a place to place trend line, and I think it's a perfect one at that. And okay, you have to put it the way it's supposed to be, not how you want it. So this is it, and market is currently reacting at the trend line. So let's see if you can spot some another levels here, because we normally look at some levels after the market touching to an area and give us a rejection at the higher time frame. So let's go to 1 hour to see if we can spot some areas. Okay, this is a place that I think we can find our resistance at 1 hour here. Okay, here. And can we find something at the down? Okay, the down 2 is there. Down 2 is there. This is also one of the major areas that we don't need to pay attention to. After market moves this way, the first pullback, then the second higher high, the second higher low before the last high. Then market broke out from the last higher low. It forms. So that also means here. That also means that the market will move downside and find a particular place to bounce, which is also one of the key areas, maybe a demand place. So let's see, as you can see here, the candles that forms there is also telling us something here. Look at this area. So as market tap into it, that gave us this kind of upward movement we are seeing right now. So if you wanted to catch this little move to the trend line, this is what you're supposed to look for, or at the areas you're supposed to look at. Let me remove this trend line and show you something. Look at this. You see? So this should have been what you look out for after market tapping into this area. The reaction will come, and after market breaking this tiny trend line, jumping, then you watch out for the bigger time frame trend line, which market is currently reacting to. Let me put it back and put it back. So you see, yeah, like this. So we're supposed to target in between these two trend lines. Let me delete this one, and let's see how we can find entries. So we have found two possible areas that market is moving in now, and it's time for us to see our predictions. because to my understanding and to my experience, I don't think market will just tap into this huge zone at the higher time frame once and start going to the upside. You can check the previous ones that market tap on the trend line. So the probability of market coming to the zone the second time is very high. It's very high. So we might have something like okay, this has already been there. Let me place it where. So let's see. So number what to focus on, the market coming down to this, okay, something like this, to this zone, maybe to the down zone, up here to this zone, retest this one, then move to the upside. That's one way. We'll be watching out for the market to display from its current position, and it can also, mind you, that doesn't mean the market cannot go below this zone. It can break the trend line at weekly time frame. It's where market is moved by a lot of things, even beyond what we think it moves the market. So we do our best, we do what we know, and they do what they want. So the market drivers, these are the kind of the places we'll be targeting our TPs when market intend to move our direction. This should be TP2 here, and the top here should be TP3. Here should be TP3, definitely the last TP, and after the resistance zone, the top here should be my TP1. Mind you, until this trend line is broken and retested, I'm not getting in, or I'll get in when the market comes to the down zone. The market come back to the down zone. That's it. So these are the two things I'm watching out for, or else I'm not trading this. So let's see. Market can also move in a different way apart from this path that I just drawn. It can also move in a different direction. Let's see. Maybe market can also do something like this. This one is already completed, and this one here, then we move to the upside. That is why I told you, if this trend line is not broken and retested, I'm not entering. So if I see something like this, I'll enter. I'll know it for market to come back to the zone, and this can also happen. Then we move to the upside. Yeah, all these two is possible. So all you need here is to wait patiently, have patience, then watch out for your candlesticks confirmation. Use whatever entry model you use. After your confirmation, you enter, but whatever you do, make sure the stop loss should be at the right place, not what you can afford to lose, but where you're supposed to put it, or else you can risk what you can afford to lose when you don't place it at the right place, and you definitely lose it. Okay, let me delete this. Sorry for the background noise, because I have colleagues here and they are currently watching ball. So this people Real Madrid match, they're currently watching it. So this is also one place that market can tap into and go and spring to the upside. So let me change the color of this zone, because it's little bit different from the main zone, and this is the color I will choose for it. Okay, reset my chart, and okay, let me delete this. This paths that I've drawn. Okay, okay, market can tap into this and move to the upside, because when you watch the candles closely, where I started drawing it from, you can see that is also a key level. And whatever you do, make sure that your stop loss is below this big zone, or else the market will show you what it is capable of doing. People will say that rates 20 pips, 40 pips, 50 pips, 2 pips, 10 pips. Man, you're supposed to put it where it's supposed to be, not pips. So that is why we normally analyze before market get there. When it's displaying what we know or what we expected, you can get in early, then have small stop loss. But if you let it move and you want to enter, you don't have a proper strategy for trend continuation entry, your stop loss will always be hit when the market goes and gives you. So let's see. This is exactly what I'm expecting. Let's go to 15 minutes and see where I just drew this my current zone. What is it? And what I'm seeing there. What I'll be seeing. Let me go to 15. Don't ignore the time frames. It's very, very, very important. It's very, very important. And don't pay attention to. Do not forget to pay attention to these candles forming. Okay, this is good. This is another flow. The red movement before the upwards, the last red drop before this move to the upside started. Yeah, that's good. That's good. So definitely the market will come back for this zone before it moves to the upside. My experience, market is likely, there is high probability for market to tap into that zone and come back to the down zone there, that black zone, before it moves to the upside. Let me remove this. I mean this zone here, So do not forget, market can still break the whole thing and move to the downside. We only do what we know. Then it displays what you want to display. We do our best and leave it for the market to also do its thing. So that's it. We try every day. Then experience help us to understand more. Practice also help us to understand more. So these are the areas that you don't need to forget. These areas, because to look for entries, especially for swing, you need to always pay attention to market gathering momentum and how it moves. So market can still do something like this, then move to the upside. This can happen. This can also happen. This one is likely to display out here. This one is likely to play out. If only market want to pen from this zone, this is likely to play out. Very, very likely to play out. And market can still move from where it is now to the